Good evening, everyone. My name is Nouran, and I'm going to present our graduation project with my colleagues Salma, Khaled, Youman, Sherif, Nouran, Osman, and Ahmed Abdel. It's such a pleasure being a part of such a great event. So let's start. Our graduation project is under the title of The Impact of Loss Aversion and Overconfidence on Fair Market Performance. Behavioral finance asserts that rather than being rational and calculating people more often, making financial decisions based on cognitive bias and emotion, researchers concluded that behavioral finance affects the investors and therefore their strategic investment choices, which affects on trading volume and share prices, consequently affecting the fair market performance. Fair market performance is a broad term to cover the outcome of policies, including the relationship between the selling price and cost, the size and efficiency of output, the progressiveness of techniques and products. Its measurement is crucial to determine whether the policy or program is working or not. In our graduation project, we will be focusing on two behavioral biases, which are overconfidence and loss aversion. First, overconfidence, where the individuals overvalue their knowledge or abilities, leading to a tendency to overestimate the perception of their knowledge about the value of a security. The second behavioral bias is loss aversion, which reflects pessimism as well as results of negativity's overall dominance. Researchers found out that the losses hurt is a steeper value of function than gains, which means people hurt more from loss more than a gain. Accordingly, the purpose of our graduation project is to study the impact of both loss aversion and overconfidence on fair market performance applied on the Egyptian stock market, namely EGX 30, to achieve the following research objectives. First, to understand the impact of the opposite effects of investors' loss aversion and overconfidence on the firm performance, to contribute in supporting the firms in understanding the effects of loss aversion and overconfidence. We hope that our project could help in achieving the SDG goals, namely the fourth SDG, which is quality education, and the eighth SDG, which is economic growth. Moving to Salma for the rest of the research elements. Thank you.
Okay. Our problem statement: what is the impact of the loss aversion and overconfidence on fair market performance? Will be applied in the Egyptian stock market. Moving to hypothesis, we assume that hypothesis 1, loss aversion, has statistically significant negative impact on the market performance, and hypothesis 2, overconfidence, has statistically significant positive impact on the market performance. We built these hypotheses based on what we found on the literature review. In the literature review, we have collected results from 27 articles from different countries, such as Ghana, USA, Egypt, Pakistan, Iran, and other countries. All of them have indicated that there is a noticeable impact for behavioral biases on the market performance, such as Haritha and Rashmi 2019, Mitwali and Darwish 2015, Mario Bertella 2019, who have tested the impact of both overconfidence and loss aversion. They have reached to the results such as higher price and higher rate of return volatilities. However, the results had some differences. Some researchers have found.
Share your presentation, please.
Great. However, the results had some differences, as some researchers have found that loss aversion and overconfidence have a negative effect on business performance, such as Potiska 2019. Lastly, the methodology. We'll use the quantitative approach, and data set depend on the most active 30 companies within the Egyptian market, and the impact and the information will be gathered from EGX 30, and this will be applied on our next semester, next course graduation project next semester, inshallah. Thank you all for your listening.